Hello, my name is Daniel Sandoval, and I'll be presenting Chapter 12, Property, Crime, and Fraud. This is the third section of the chapter. Uh, the term fraud is defined as involving deceit or trickery for financial gain for some other material advantage. Many fraud cases could be easily considered as white-collar crime, as they are usually committed by wealthy businesses as part of their occupations. Identity theft involves it's just another type of crime. Involves acquiring someone's credit card number, social security number, bank account information, or other information that is used for illegal economic gain, including the draining of an individual's bank account. The arrival of the internet has, as many of us are well known, increased identity theft by enabling hackers to access credit card information from individuals' purchases from many company databases. The NCVS estimates that 6.4 million households suffer identity theft annually, or 5.5% of all households, which suffer a financial loss of 3.2 billion every year. The Federal Trade Commission estimates that identity theft affects 8 million people annually for financial loss at almost $16 billion widespread, and it's estimated to cost more than 50 billion annually. It's approximately 5 billion for individuals and 48 billion for businesses. This actually happened to me not too long ago. I lost my credit card, and driver's license, and fraud was committed on my case. So, but the money still was replaced by my bank, but it's still money that is lost by our financial institutions. There are two specific types of identity thefts that involve check fraud and credit card fraud. Check fraud is a common crime, especially with the advent of high-speed printers, scanners, and other equipment to produce counterfeit checks. It is estimated that check fraud costs about 20 billion annually and involves more than 1 million fraudulent checks used or deposited each day, which in my case is kind of interesting because I work at a bank and I'm a teller, and it's amazing to see that many checks get past us every day. A crime similar to check fraud is credit card fraud, which amounts to at least $1 billion a year, which usually involves lost or stolen cards, theft or card numbers from the internet, and their acquisition through deceptive phone calls or through someone's email or trash. As with motor vehicles, the abundance of credit cards provide tempting targets for motivated criminals. Some robbers or burglars acquire credit cards along with money and then use the credit cards until the victim reports the credit card theft to the bank. And another form of crime relating to fraud is tax fraud, defined as tax evasion, which involves a person to intentionally not pay their taxes that are owed. The Internal Revenue Service, which is IRS, refers to this problem as a tax gap. The difference between taxes that are legally owed and revenue that is actually collected, with almost all of it due to fraud. IRS estimates that the tax gap is in 2001 was 345 billion, or about 16% of all taxes due by April 15th. Of this amount, 55 billion was eventually collected through enforcement and voluntary compliance, yielding a net tax gap of 290 billion. Of this amount, 260 billion comes from individuals and small businesses, and 30 billion comes from corporate. As high as this gap is, auditors from the U.S. Treasury Department think this may be even higher than the IRS estimates because of deficiencies in the way the IRS and deficiencies in the way the IRS compiled its estimates. Another type of fraud is insurance fraud, which accounts for about 10% of all U.S. claims. Insurance fraud is estimated to cost about 85 billion and 120 billion. Between those numbers, 85 billion and 120 billion per year. Even though the lower figure is almost 5 times higher than the FBI's estimate of the loss due to the street property crimes that worry us much more. This is a less serious crime due to its violence, but it's 5 times greater, even with the lower number. The billions of dollars lost to insurance fraud do not come to us at gunpoint, but are costly nonetheless, and they raise the average household's insurance premiums by more than $100 per year. As with tax evasion, many other wise law abiding citizens think insurance fraud is acceptable, with almost one-third proving of exaggerating insurance claim to compensate for paying a deductible. Several types of insurance fraud exist. One type involves arson to collect fire insurance. Other insurance fraud is also very costly and is a type of white-collar crime it's a type of white-collar crime because it is often involves medical professionals. Another type of insurance fraud involves cars and other motor vehicles. Auto insurance fraud is, as it is usually called, amounts to 14 billion annually and increases the average auto insurance by $200, or about 5 to 6 billion nationwide. And about one-third of all claims for bodily injury in motor vehicle accidents are somewhat fraudulent. Auto insurance frauds occurs in several ways. One goes as paper accidents, which no accident actually occurred, but false reports are filed to collect insurance money. 2, minor accidents deliberately committed to collect insurance. 3, stage accidents, which cars already damaged are driven to the same location so the drivers could pretend an accident occurred. 4, exaggeration of whiplash and other injuries after real accidents occurred. Abandoning hiding a car and pretending it was stolen, arriving at a scene of an accident and pretending one has been injured. These are just a couple ways fraud could be committed on behalf of car insurance. Computer fraud is another type of fraud or crime that is committed very often. Much computer crime involves hacking one. By example, maybe someone would be breaking into a website and acquires information from someone's computer. Often the goal is identity theft, to steal someone's credit card number, social security number, other information that can be used to acquire money, other valuables, or information fraudulently. Sometimes hacking is done for thrills, as a behavior relating to a term professionals refer term called phishing, which involves the use of email or instant messaging to gain sensitive information. A popular type of phishing involves email that purportedly comes from a bank or a financial institution and asks the target to provide information so that a supposedly account problem can be corrected. Other computer crimes: infringement of copyright laws and plagiarism. Term paper mills, which a generation ago consisted of stacks of old paper in a offender's room, which he or she made known were for sale, now exist in a number of websites on the internet. So this ends the third part of this chapter. It just basically covered the, say, 5 different types of fraud. And my name is Daniel Sandoval. One more time, thank you for your time.